Yes guys, welcome back to another YouTube video. Alright, in today's video, we're going to be breaking down the ICT silver bullet strategy. We're going to be literally explaining everything that you need to know from A to Z about this strategy. We're also going to be going over a few example trades inside of the charts towards the end of the video so you guys can get a better understanding of this strategy. Now, I know I haven't uploaded a video in a while, and this is because I've had a pretty serious eye infection. However, I am getting better now and that eye infection is starting to clear up, so we should be getting back to normal weekly uploads every single week for you lot, so be ready for that. But other than that guys, let's jump straight into the video. Okay, so starting off, I've listed a bunch of bullet points here of what this strategy actually consists of. Okay, so number one on the top of the list is the most important, okay, is sweep of liquidity. Now, this can either be a sweep of buy side or sell side liquidity, okay? Number two has to be displacement. This is also very important. The displacement has to be a clear candle drop and closure, okay? It can't be a shallow wick below, okay? We want to see an actual clear displacement. ICT does a perfect analogy when he talks about displacement, and he says, you know, when an elephant jumps into a pool, all of the water displaces out of that pool. So try imagine that whenever you're looking for displacement on the charts. Okay, number three is the market structure shift. So of course, depending on the direction you're trading, let's say for example, you're going in short, okay? You wanna see a break below a short-term low or a swing low. Very simple. Let's say you're going long, you wanna see a break above a short-term high or swing high. Very, very simple. Okay, preferably you wanna see a candle closure with that displacement instead of just a shallow wick above. Okay, I don't really count that as a market structure shift in my opinion. All right, number four, a very important entry model here as well, is the fair value gap, okay? So of course, most of you guys that watch my channel and watch ICT channel already know what an FEG is. For the people that don't know, I'll give a brief little explanation for you lot here. So all it is just a free candle pattern or formation. I don't like to use that terminology because we're not pattern traders on this channel. However, it's literally just an inefficiency or an imbalance between the first candle's high and the third candle's low for a bullish example. Of course, this is vice versa for a bearish example. But anyways, the last step here, okay, is very, very important. Entry has to be inside of that 9:45 to 10:15 macro. Okay, now if your entry isn't inside of this time window, the trade setup is going to be less likely to actually play out and it's going to be less probable. In my experience of trading this strategy, most A+ setups and trades happen when you get that entry inside of this time window, and most trades will play out to the final TP target that they're supposed to if you get that entry inside of this little window. Now, don't get me wrong, you can still trade inside of the 10 to 11 silver bullet hour, and you might potentially get an entry outside of the macro, but the trade sub isn't going to be as high probability as if you were going to get that entry inside of that macro, if that makes sense. So anyways, let's jump on to the next slide. Yes guys, just a quick one, sorry to interrupt the video here, but I actually want to share last week's results for the VIP signals room. We actually had a total weekly gain last week of 83.5 handles, okay, and we're going to be breaking down every single trade that we took that week, including the W and also the losses, okay, fully transparent, and pretty much showing you guys how it would be if you were to join the team. Let's start off with Monday morning, okay. Every single morning I will send in the liquidity levels that I'm monitoring and watching on NASDAQ, and a little bit later a link to the live stream, which is a Zoom meeting, will be sent in, which you can access at 9:30 a.m. New York local time. Okay, so there you have it, we're live. The signal was also sent into the Telegram chat, so long NQ, TP1 here. I tell the group close 50% here, all right, 35 handles secured. Trail your stops, okay, closing out early there as ES took the objective. 70 handles secured on the day, okay, and that was us done for Monday. Tuesday, again, we took a short trade, okay, stop loss, TP, final TP. TP1 got smashed for over 40 points. TP2 got smashed, 70 points secured again, and then we got stopped out in a profit for 70 handles, okay. Wednesday, we took another short trade, stop loss, TP, TP2. TP1 ended up getting smashed. We secured 27 points there, and then we got stopped out in a profit for over 38.5 handles on the day. Okay, so that's 3 out of 3 on the week. We were literally on fire that week. Thursday came around, we took a long trade. Unfortunately, we got stopped out for 25 handles. We tried the shorts and we also got stopped out for 25 handles. So since we took 2 losses that day, I decided to end it there and be done for the day. Okay, so a total loss of 50 handles for Thursday. Friday, again, we took a long trade, ended up getting stopped out for 25 handles, waited for the second macro, took another long trade, and we ended up getting stopped out again for 20 handles. So Friday and Thursday wasn't our day at all. However, overall on the week, we still ended in a profit, okay? So even though we took 4 losses towards the end of the week, we took 3 W's to start off this week, we still ended the week up 83.5 handles, okay? So it really doesn't matter, guys. If you take losses, you can still become profitable. Now, if you've been recently struggling with your trading and this is something that you're looking to get to the next level and improve at, then the Inner Circle Signals is the place for you, okay? It's a VIP members chat where live signals are sent in, which you can exactly copy. And we also go live every single morning at 9:30 a.m. New York local time, okay? Where you can watch me trade live and copy my exact trades and make money with me. So if that's something that you're interested in, go make sure to check out the links in the description. The VIP Signals room is currently at only $50 a month. But anyways, guys, let's get back to the video. All right, let's talk about stop loss placement. It's a very important topic, and most people struggle with, placing their stops at a valid area. You don't really want to be risking too little where the trade doesn't have that much room to breathe, and you also don't want to be risking too much where it's just not necessary to be risking that much, okay? You want to set your stop loss placement in an area that is valid and in an area that you're also risking just enough for the trade so it can breathe and it can actually play out. There are 3 main areas where you can place a stop loss, and that would be considered valid, okay? So first, the best area to set a stop loss, okay, is always going to be either the swing high or the swing low, all right, depending on the direction you're trading. However, some cases you'll be risking way too much if you try to set a stop loss below a swing low or a swing high. We've seen this recently with the January price action. The candles tend to be slightly larger, so most of the time my stop loss is not going below a swing low or a swing high, okay, because you're risking just way too much. So where is the second best place to set your stop, you may ask me? This will be the first candle's high of the fair value gap. If you are going short, okay, if you are going long, it's going to be the first candle's low. Always vice versa, okay? Let's say you're still risking too much, all right? The last place to set a stop loss will always be the displacement candle's high, which is the second candle, all right? And of course, that's a short scenario, so if you're going long, it's gonna be the displacement candle's low, okay? So those are the 3 main areas that you should be setting your stop placement with this strategy, okay? Now, some people, they trade different strategies and this will be totally irrelevant to them, okay? So only take this advice if you're trading this specific strategy. And just to add one little bonus in there for you lot as well, try not to be risking more than 25 handles to 30 handles max on NASDAQ. Once you're risking a little bit more than that, it starts to get a bit tricky and the risk management just goes out the window and you're risking way too much on that specific trade. And I wouldn't even be taking that trade in the first place, okay? If you're risking more than 30 handles, it's not a valid trade to take, in my opinion. All right, let's talk about take profit placement, okay? This is also very important because most people don't know where they should be taking profits, okay? Should you be taking partials? Should you take full position off, right? We're gonna be covering this topic today. So there are also 3 main areas to set take profit points, okay? Number 1, you wanna target a swing high or swing low, depending on the direction you're trading again. So let's say there's a swing low here and you're going short and that swing low is around 40 handles in profit. You can decide to take some of your position off at that swing low. Don't be taking your full position off because that's not a valid area to be taking full take profit, but you can take around 50% off if you like, okay? So these areas can act as either internal buy side or sell side liquidity. Just make sure that it has at least 25 handles that you can profit from minimum, okay? If it's anything less than 25 handles, I'm not gonna be taking anything off my position because it's just way too little to actually make a profit, okay? So otherwise, don't target it. Measure 50% of the most recent price range, okay? So you can get a fib on your chart, go from swing low to swing high, and they'll give you 50% of that recent price range. And you can target even in a balance that is at a premium or at a discount of that range, okay? And this could be your first TP, or it could either be your full TP, okay? Totally up to you. But usually this is a good area to take some partials off. Okay, and lastly, you can target an external level of buy side or sell side liquidity as your take profit area. And these are usually the areas that I will be taking my full position off, okay, once it goes outside of the range. Okay, lastly, very important, okay, let's not forget to talk about times and macro. Without specific times and macro, this strategy is absolutely useless, okay? You don't want to be entering your position at any random time of the day, okay? You want to be entering at specific time windows and especially 30-minute intervals as well. So first things first, silver bullet hour, okay? It's from 10 a.m. to 11 a.m. New York time. Make sure your trading view chart is set to New York time, okay? Because if it isn't, then all of this stuff that I'm teaching you lot is gonna be absolutely useless and invalidated, okay? Because it's not gonna work for you if you're not on the New York local time zone. Please make sure your settings are set to that. That's very important. Okay, and again, macro, 9:45 to 10:15 New York time. Usually you'll get your entry inside of this 30-minute time interval. So again, make sure your entry point is inside of the small time window or macro in order for the trade to be an A+ setup and also have the highest probability of working out. Okay, I'm not saying it won't work out if it's outside the macro. I'm just saying it's going to be less likely to work out. Hence, I only trade inside of these time windows. Okay, but that is pretty much it, guys. We've covered literally everything that you need to know to be profitable with this strategy. Of course, psychology and risk management comes into play as well. But now that we've covered this PowerPoint, we're going to be jumping into the chart and we're going to be showing you a few trade examples so you guys can understand this strategy even more. All right, let's jump straight into it. All right, guys, so I found a perfect example of this strategy in play. Okay, so let's start off with how I would approach this setup. Okay, going into the morning, what levels I would mark out, what I'd be looking for, etc. Okay, so first things first, I'm starting on obviously the higher time frame, like the daily and the 4 hour, to get my bias. But in this scenario here, we're going to be jumping straight into it and it's going to be starting on the 15-minute time frame. Okay, simply because I want to keep it simple for the viewers. So anyway, as you can see, this right here would be your buy side liquidity level. Okay, and then you could mark out this clear sell side liquidity level down here also. And now all you're gonna have to do is just wait for one of these levels to get swept. Boom, there you have it. Buy side liquidity has been swept. So that's number one on the checklist. We've swept some sort of liquidity. Now, what's the second thing on that checklist? Okay, what are we looking for next? We're looking for a clear displacement. So you're gonna jump into that lower time frame and you wanna wait for your displacement and market structure shift. As you can see here, okay, if you actually measure this from swing high to swing low, okay, this is gonna be your most recent price range. Okay, now price ranges are everywhere. This could be your price range from this low to this high, but it's important to pick the most recent one. So this is the most recent, price leg that we've had higher, and we've measured from swing low to swing high. This is 50% of that price range. So you can either target a sell side or buy side. Okay, in this case, it's going to be sell side, or you can target an inefficiency imbalance that's below 50%, but I would only do this if the inefficiency is very clear and it's standing out to you. Right now, we can't really see any clear imbalances inside of that 50% area. Okay, there is one here, but it's in a very deep discount, so price may not go towards that point. Anyways, let's wait for that displacement, all right? Okay, boom, we get a clear displacement. Notice how the candle closes, okay? We're not getting a shallow wick below this low and then back up, okay? It actually closed. So we want to wait for that fair value gap now. There you have it. We have the fair value gap. Okay, so first candle's low, third candle's high. That is a clear FVG right there. Okay, we also had a market structure shift because we broke below a short-term low or a swing low, okay, with displacement. So that's 3 bullet points that have been covered already. Now let's make sure that we're inside of that 9:45 to 10:15 macro. As you can see, we're clearly inside of that, so even better. Okay, so now we're going to be entering off of this fair value gap here, and we're going to be placing our stop at the swing high and seeing if we are risking more than 25 to 30 handles. Are we risking more than that? No, we're not. We're risking 21 handles, which is absolutely perfect. Hence, the stop placement is going to be valid. Okay, so we're going to keep our stops there. Our first TP is going to be at this low here. Okay, so this internal sell side down here, we're going to be targeting, and we're going to take 50% of our position off at this low or at equilibrium of this price range. And then our full take profit is going to be all the way at this external sell side liquidity level. It's not external if you look at the higher time frame price range. However, this most recent price range, okay, this is going to count as an external level. Okay, you can also take profit too at this imbalance here. All right, so TP1, you can take 50% off at this low, 50% off the price range. TP2, you can take another 30% off at this imbalance here in a deep discount. And then final TP, you can take your full position off at an external sell side liquidity level. So anyways, guys, let's see how this trade would play out. Okay, so there you have it. TP1 would have been smashed there and you would have closed around 50% of your position off. Boom, there you have it. TP2 smashed, so you're now out 80% of your position and you're literally holding around 20% more to that remaining external level. So let's see if we get it. Boom, there you have it. Final TP smash. It's as easy as that, guys, okay? Now, of course, this is a very clean example, But I'm gonna be honest with you guys, I didn't even cherry pick this, right? I literally jumped into the chart, went straight to Monday morning, okay, and just skipped to the 9:45, 10:15 macro, and I found this straight away. I didn't even look for hours to find this, okay? And this happens pretty much every single week. So you'll get a very clean setup like this at least once to twice a week, okay? That's A+ setup, right? I'm not saying you're gonna get this every single day. Now, you will get trade opportunities every single day. Are they gonna be this clean? Most likely not. Okay, it really depends on the conditions and the price action. Okay, I have seen before, you know, when we've been getting trade setups like this every single day. Okay, but that period we had very, very clean price action. Okay, so it's not always like that, but you will get at least one of these A+ setups once a week, guaranteed. And that is more than enough to be profitable with this strategy. So I'm gonna leave it there, guys. I hope you lot enjoyed the video, okay? If you got some sort of value out of this video, please leave a like, leave a comment, share, and subscribe. Comment your suggestions down below of what type of videos you wanna see next, what type of strategies you want me to break down, okay? Because I have a ton of entry models that I use that I haven't really broken down on this channel. So leave your thoughts and suggestions down in the comments below. I'll make sure to read them, take them into account, and potentially do a video based off of that comment. Also, for anyone interested, we do also have the VIP signals room linked in the description, okay? $50 a month. I live stream every single morning in there at 9:30 a.m. New York local time, okay? So it's basically a one-to-one session with me where you can literally ask me any single question that you'd like, okay? Whether it's a question about macros, what times of the day you should be trading, what pairs we trade, etc., okay? Any single question that you want to ask me, you guys can ask me, and I guarantee that question will be answered. Okay, no questions are skipped out. But yeah, I'll keep it short, guys. If you are actually serious about getting your trading to the next level, go make sure to check them links in the description out and secure your spot right now for only $50 a month. Anyways, guys, I will see you lot in the next one. Take it easy.